Hey traders, welcome to Charts and Coffee for December 31st. Last Charts and Coffee of the year. Great to see everybody. Hope everyone's doing well. Excited for the new year. Wrapping up 2021. All right, so well, let's get to it. We know what's coming today. Today's the last trading day of the year. Today is the options expiration. So if you have those D31 expiries, gotta ditch those. We're probably gonna see some volatility. And today's the day that we decide whether or not, how we want to position ourselves into not just the end of today, but what's the mindset? What's that, December to January switch we're gonna flip? And it's a pretty significant one because the beginning of anything, the beginning of a day, beginning of a week, month, quarter, year has a distinct difference in the ending of something. In fact, the ending of things is harder to trade. The beginning of things is a little bit easier relative to clarity, but January is tricky because now portfolio managers have an entire year to get those returns and build positions. And so I'm going to stick with what I said earlier on Monday, which is or I should say Tuesday. Once we had that rally on Monday, Santa was pretty much done. The job was done in terms of the seasonal that is the Santa rally. There's no way to separate seasonal and Santa. There's no way to separate window dressing and Santa and the end of the seasonality. And so I'm not saying we collapse from here, but the bulk of the move, as we've talked about, is done. So let's get to the questions. But what I'd really love for everyone to do, maybe over the weekend, we have homework over the weekend, is start thinking about which markets might get attention in Q1. Which corners of the market suddenly might start looking a whole lot more interesting because they're at the first floor, maybe the basement, maybe the second floor, and there's a whole lot of room to the upside to get to the penthouse. Or are traders and investors and money managers going to just buy things that are already at the penthouse, that are already on the top floor? And my experience is no, that's not usually what happens. Okay, so think about those opportunities. This is, if you love bargain hunting, now's the time to start doing that. If you like short interest squeezes, now's the time to look at that. If you like sector rotation, now's the time to look at that. It's not been in December, it's now. So Happy New Year. Yes, thank you, Kalwan. I appreciate that. I never understood what the word professional meant in the capacity that we live in, this trading world. But if that means that we take our experience and try to share it as transparently as possible, then I'll take it. And I appreciate you all, being part of this community. Otherwise, I'd be talking to nobody. You got, so I do appreciate the time. All right, Hobo Historian asks, how far back should one be looking for daily swing trades in order to decide a trend? For example, Bank of America? Sure. All right, for example, Bank of America has broken structure since November. Yep, but it was very bullish. So how far back? Well, luckily now with things like grab candles and propulsion dots and the JT multi, you don't have to worry about look back. You don't have to do that at all. Just look at, well, do this. Start here. Hobo Historian, start here. How many grab candles that are green do we have in a row right now? None, right? Do we have a lower JT multi that's green? We don't. Are we green over green? That we definitely are not either. So with the tools that we've introduced over the past few years, many of which are free, there's no secret squiggle that's going to ever answer all the questions of the market. But when it comes to structure, understanding trending versus non-trending environments, frankly, nothing is better than the Grab and the JT Multi, which both happen to be free. So I would say, how far back? Don't worry about how far back. Just count out at least 5 Grab candles green in a row and start from there. Start from there. In the meanwhile, remember, because as you alluded to, the previous trend was up, what we can do is just look for oversold buys. Queue up a slow stochastic, queue up a ready aim fire, and look for that opportunity. All right, what is my favorite book on Dow theory? I don't have a single book on Dow theory on that bookshelf behind me or the bookshelf here to my left. I don't have a single book on Dow theory, to be quite frank. Um, I'll tell you what, I don't say this very often, but the Wikipedia on Dow theory is actually great. Here's the problem with Dow theory. I say problem, I mean, it's brilliant, but here's the challenge with Dow theory is there are no indicators to tell us how to do what Dow taught. Remember, Dow theory is posthumous. People went back and codified what he taught and presented it as Dow theory, which I guess it is, but it was never something that he codified. So then I felt that it was sort of our job then, and this was the challenge of anyone who decided to make Dow theory part of their process. How do I measure volume? How do I understand underlying market direction? How do I understand correlations and trends? So I don't have a single one. As far as continued learning, two really easy things. Between the two of these things, it should not take you more than 90 minutes to know most of what I think is useful about Dow theory. Number one, there's a video. You can search it. Go to Google, ask the Google, the all-knowing, all-seeing Google, and just look up my name and Dow theory. I did a webinar on this, free webinar, some time ago, and you'll find it either on the Simpler Trading YouTube channel. I did a version for my buddies over at Pepperstone. You'll see some version called Dow Theory Decoded. Dow Theory Decoded. Check that out. Just Google my name and Dow Theory. And also check out the Wikipedia. I think the Wikipedia on Dow is actually really, really good. Investopedia has one, but no, I'm talking about, yeah, Wikipedia has a really nice little breakdown on Dow theory. So check that out. It's succinct. It talks about the 6 tenets. That's I don't have an extensive. My knowledge of Dow theory is applicable. It's what I've applied to the markets. For example, people who still follow all the tenets of Dow theory are still folks running around talking about transports in the Dow. That's dated, right? That's what I mean. We have to take this knowledge and then apply it to the market. So there's still this some every now and then there's just sort of this misguided allegiance to transports and the Dow Industrial Average. In Dow's time, do this. It's a fun little exercise. Go back and look at the last 100 years of the weighting of stocks within the Dow Industrial Average. It will make you laugh out loud. And you'll see why early on, say maybe even up into the 60s, it made sense to look, even maybe into the 80s, it made sense to look at transports and the industrial average. Now it's ridiculous. It makes no sense whatsoever when you look at the composition of what that Dow is now. So we have to be able to understand why things were relevant in Dow's time and why they may not be. And that's the only one of the tenets that I think is not as relevant any longer. All right. So that's why I say, get a real world, dirt under the fingernails feel for any of the theories, ideas that you are wanting to pursue. That's what's helped me. But I'm a huge fan of Dow theory. It's talked about all these years later for a really good reason. All right. Any idea what happened last night that caused the NQ and the ES to drastically drop? Michael, it must have been my giant short position. I'm kidding. I have no idea. There was a drastic drop last night. So let's see. You talking about right in here? I mean, and I'm not saying this to be funny or cute, just more selling pressure than buying support. That's usually it. And then look at that time of day, right? Think about that time of day. This was 1910. So this was 10 minutes after 7. Really, really early in the Asian session. Definitely not full participation, which you're not going to see till about 8, 9 p.m. Eastern. So I'd say it's a combination of a couple things. We're moving sideways. Looks like we just ran stops through what had been a pretty decent little support area in about the 2 hours preceding. And then low volume, that's the early part of Auckland, Sydney opening. We really didn't do anything after that, though. So no, no clue. I mean, look, the honest answer most of the time, and the other thing I would tell you to do is look at the economic calendar. Was there anything scheduled for that time in the evening? Right? We did have Chinese manufacturing PMI that can move the market too. So start with the calendar, and then if we see that there's a calendar event, overlapping with the time of the move, then we know it's a volatility move based on data or some sort of occurrence. If we don't see some sort of data release or some sort of event, then I would tell you just accept what is probably the best answer most of the time. More buying, selling, more buying support than selling, or more selling pressure than buying support. That's usually the answer. If we have a why, great, but sometimes the why just won't be there. But terrific question. Just remember, anytime we have these illiquid times, and that is an illiquid time of the day, it can happen. And then I think about an hour later, we saw the Chinese data come out. So I'm guessing maybe something related to that. All right. Can I explain prop dots and when and why they activate? So propulsion dots are based upon exponential moving average crosses. They turn on when they cross and interact with price in a specific way. For me, they replace moving averages because they're what I consider to be self-correcting moving averages. So if I have, for example, an 855 setting on a propulsion, 8 EMA 55, it'll plot where the 55 would normally be, but only after the 8 has crossed it and interacted with price in a specific way. So that's what the propulsion or prop dots are. Thanks for the question. HD for a long call. Not from where it sits right now, but generally, JR, I'd be with you. 8 Home Depot. Actually, look at ITB, XHB, XLRE. Those have all been 3 very strong corners of the market. And so Home Depot, as far as a long call, not from where we are, but as a general rule, back into a double green environment, yeah, I would look at getting long on a pullback. Sure, sure, but not from where we sit. And I'll tell you what was very challenging. This was challenging. Really nice double green, pull back, hit the 55. That distance of about 6, 7 points. That was a tricky little trough to have to navigate. You never want to get bearish when an uptrend breaks. That's probably one of the biggest mistakes. By the way, and that breaks one of the Dow theory tenets. You never want to just flip because bearish momentum is kicked in. Most trading participants do. So what you want to do is say, look, my trend following strategy may not be as applicable anymore because the trend is broken, but I don't want to flip directional bias. I want to accept that we've gone from buying the dip to buying potentially oversold support. So it was a tricky trough through there, but another dip buy, I would have no problem with that whatsoever. Yeah, whatsoever. Okay, next question. Natty Gas. Sure. Natty has been moving lower. Natty's been in a downtrend. And so some of you might remember there was a time, actually most of summer, which, about August time forward. And then even into November, we were very bullish and long Natty Gas. It was probably one of the top 5 trades of my year. That was a monster trade for me, natural gas. And I have a lot of free videos covering why we did what we did when we did it. And it had a lot to do with the uptrend that was visible and the seasonals that kick in for the summer that start in August. Come November, I said, look, the best of the seasonal was done. And the only way Natty gets a boost, really, from here on out, would be weather or some sort of severe supply disruption, because the demand narrative is done, right? So natural gas had a period of time where the seasonal and the trend were in sync, which is really the only way to trade seasonals. When it's in sync with the underlying market behavior. And then um, once we got into November and that seasonal was pretty much done, we knew that unless there's some severe weather coming along, 90's going to do what it typically does, which is the bulk of the bullishness is gone. So could we bounce from here? Yeah, we actually could, but Natty is, really no longer something on my radar in any way. The best of Natty is behind us, unless you're asking Rog, can we short? Yeah, you can short Natty. You can short natural gas. If we get to about 4.1 on NG, notice I'm looking at NG, not UNG, then go ahead and look for some long puts on the UNG ETF. Watch the futures contract, and then you can kind of choose your own adventure, as I like to say, and go with the long puts in UNG. But remember, watch the NG futures for what, if anything, we can do in UNG. And that would be a short going forward for me. Hey there, Al. Can I check on Piton? Sure. So, Peloton is, gosh, I don't want to be mean to Peloton, but Peloton's exactly where it should have been all along. Notice how it's just kind of come back to earth, which is where it spent all its time before the gyms got shut down. And now Peloton's come back to probably where it was always destined to be. Um, do I ever see Peloton going back up to these levels? I don't know. I don't know if you want to short it. I don't know if you want to get long. I don't know if you're bottom picking. So, you know what I'm going to say when it comes to the red over red. It's a short. It's a short. And, it has nothing to do with my opinion of the company. I think the product is great. Everyone I know who has one loves it. But it was just the right product at an insanely right time. And then when that time was gone, well, you can see how the stock has moved since. Be very careful, because it was never a technical. It's a very tricky thing. Look, I traded on the way up. It was a very profitable trading name. Not for a moment that I think this was going to be an investment or anything like that. So please be cautious, because this stock has had its time in the sun, and I'd say it's largely done. Yes, there might be some little wait for the market to go neutral, and maybe we have a 1, 2, 3 bottoming pattern, but I would leave this thing alone. It moved up for one reason and one reason only, and it was. I mean, look, any exercise equipment during that time was almost impossible to get, almost impossible, and it just benefited from that. So, and now think of the crowded crowded exercise space now that we have. I mean, oh my gosh, I'm trying to think of just some of the recent products. Peloton is not alone in the whole you want to out from home world. So I don't have a lot of good things to say about it, and structurally, it kind of pans out. So I don't mean to throw water on the Peloton lover parade, but it's not something that I'm in this structure that I'm a fan of. We got to think about why, and how would it move up again, if that's what you're looking at. If not, short the rips. Short the rips. All right. Next up is Peloton has potential to bounce big in 2022 once. Yeah, maybe. Look, what the bulls need a reason to show up. They haven't yet. If it's going to bounce in 2022, then look for some volume levels and wait for a 1, 2, 3 pattern. But I don't know that that's going to, and again, it depends on how much of a bounce you're looking for. So next up is GC is starting to look interesting. Look, I wish we had a better clarity. I wish we had a better picture of what was going on with real yields. It's been tricky at best. I'm with you. It's a choppy market, and it's on a trend. So we have to remember to wait for the edges of the chop before we get in. And so edges of chop mean overbought and oversold, don't they? And this one's tough. I think the layers 1760, 1720, we have to wait for the market to get down to those levels. And on the flip side, I don't want to short gold. I really much rather be long, but if we can get up to maybe 1835, head back down to 1760, chop is tough, gang. So please know gold is in chop, right? Gold is in chop. So that's really it there. Um, all right. So uh, next up, yeah, and by the way, as far as anyone looking for bounces or whatever, look, if there's going to be a move, um, it's usually going to have some sort of pattern or shift in the underlying market environment to accompany it. I don't have a short in Peloton. If I do have a position in any of the symbols we're talking about, I'll usually tell you all I don't have a position in Peloton, long or short, nothing. So I'm pretty neutral about whatever happens from here. I'm just very clear on why it rallied in the first place. Let's see. We're due for snowstorms on Saturday. Look, Mark, if we're talking about it, it's already priced in. So unless that snowstorm comes in far worse than expected, uh, it's not going to be a mover. Remember, if we're talking about it, it's priced in. If it's priced in, you have to be surprised. There needs to be something greater than what was already expected to make the market move. And I believe rips will be shorted in Natty, at least for a little while. All right. DocuSign, sure. Again, there's probably some interest in, bottom picking, something like this. You're always going to ask yourself, I always ask myself, why is it down here to begin with? Not everything that's cheap or inexpensive is actually valuable, right? Just like not everything that's at a new high is overpriced, right? But just because something's cut in half almost doesn't make it valuable. So we have to ask ourselves, why was it up at 300 and change, and why is it down here on around a buck 40? And so until the pattern starts to reflect a shifting of opinion, I don't think any stock has to regain its former glory. I never presume that ever. So just be careful when you're wandering into a market that's been, clearly hammered and is in a downtrend. And just be careful with that, because there's no reason DocuSign has to ever go to 300 again. There's no reason for it. There's no reason. I can't say there's a reason it has to go to 130 either, but this is where we are. So sometimes we just have to trade what we see, and we can say technically maybe the gap gets closed, but that would be a heck of a move. Gosh, to see that gap get closed would be a heck of a move. So wait for the bottoming pattern or place a stop below the near term low and presume that if this is a nice volume layer, which it is, by the way, that's your point of control. So there's volume down there. That's promising for those of you wondering, hey, could we move higher? So let's see that volume stick around. Let's see that point of control stick around. And then, maybe if the floor gets solid enough, that's where you have something to push off of and move higher and possibly close the gap. All right. Okay. So, if there's anything in 2022 that I want to definitely emphasize more of, is it's structure before strategy and trade what you see. And that means that for the most part, other than macroeconomic trends and data releases, earnings, things of that nature, just don't try to front run your process. Don't try to front run the actual patterns, right? Just trade what you see. And I know that when I have spent throughout my career periods of time just sort of just trading what I see and presuming there is just a plethora of things I don't know about market catalysts, and just saying, hey, but somebody knows and they've responded, and I can see the volume or I can see the price action. That served me so much better than trying to outthink the market, right? Just react, counterpunch. And I hope everyone a happy and prosperous and healthy 2022. I love a new year. Nothing like a fresh year to try and do it even better. And thanks for coming along the journey here. Charts and Coffee. caffeinate and dominate crew. I'll see you all in 2022. Be good to each other.